Discussions in this show are for entertainment and educational purposes only and should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer and member of FINRA and SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and neither SmartPro Financial nor Bridgeway Wealth are affiliated. Hey, everybody. Welcome back to the Working Wealth Podcast. I'm Patrick Rogers, and we are so excited to bring an incredible guest today, Mr. Jonathan Godwin, a local CPA and tax extraordinaire, if we can call it that.
Sure.
If you haven't, before we jump in, if you haven't gone back and listened to our last few episodes, make sure to do that. We got some great information and great content about how to help improve and manage your financial life better going forward. And with that, we'll jump on in. Yeah. So, Jonathan, excited to have you, man.
Glad to be here.
We're going to talk about one of the things that people love to hate.
Taxes.
Fun stuff, right? So that's, and from my perspective, that is like your life, your domain, right? Is where you are, you deal with all of that, helping people ultimately reduce, avoid, mitigate their tax issues, bills, things like that over time. But before I completely butcher your expertise, I'm going to shut up and let you talk for a minute. So tell us about yourself. Where are you from? What's your background?
Sure.
What does your business look like today?
Absolutely. Jonathan Godwin. I was born in Lake City, South Carolina, where I think people know more about it now because of Darla Moore and art fields and all of those things. But it's the claim to fame is it's an hour from there to the beach.
Yeah.
So that's
you're close
kind
to
of
everything.
Yeah. So I went to Clemson and finished in 1993, December of 93. Got my first job in Greenville in 94. Was there for 8 years, and started my own firm in 2002. And love it. It's a good gig. I grew up in a very small town. I went to the University of South Carolina for 3 years before I went to Clemson to finish.
Okay.
Wanted to leave the small town, go to the big city, and hang out for a bit. And for those people who like Columbia, I hated Columbia. I still don't like Columbia. It's just so hot. It's always hot in Columbia.
Yeah.
And
we call it famously hot.
Yes, yes. And so also going to college in the middle of downtown Columbia was not fun. So I visited a friend at Clemson, loved it, transferred up there to finish, and I'm still here. I never left.
Yeah. That's great. So that's very interesting to me in a lot of facets because I'm from Greenville, went to Columbia for school, was there for all 4 years. But my dad did kind of the opposite. He was from Columbia, went to Clemson for a year, and then went back to Carolina to finish out. It's like I know a lot of people that kind of did that dance, but specifically you were in the small town going to the big city and then ended up back in the small town.
Yep.
Right?
Yep.
Clemson was a lot smaller then, still relatively small, right?
Yeah, for sure. So. I don't know. Living in a small town my entire life and working in my dad's business and hanging out in a farming community, it just seemed like the thing. I had a scholarship to University of South Carolina. I was an engineering major.
I didn't know that.
I was.
I have an engineering degree.
Oh, do you really?
I do, yes.
Well, if you graduated, you did better than I did because I was failing out of college in my second year, and I was valedictorian at my high school. I had a full ride.
Oh, wow.
And I lost it because I couldn't do the engineering thing. And I'm gonna give a shout out to my college roommate who was a music major. Who found me despondent on the sofa in our apartment because I had to change majors. I didn't know what to do.
Oh, man.
And I had been working in my dad's business for 10 years as a child, and I used to close his books for him. But I didn't know there was a major for that. Like you could major in that in college and get paid for it. I mean, I got paid a little bit, but mostly with food and candy.
Right.
So I'm lying on the sofa in the apartment, lights are off, I'm terribly depressed, and he's like, you need to go to the business school and change your major. I said, to what? He said, accounting, you moron. You know how to do that, so you need to go into accounting. And I left engineering with a sad, pitiful 1.9 GPA.
Oh, man.
And I wrote a letter by hand on a yellow legal pad with a red pen to the dean of admissions in the business school at USC, and they let me in. I don't know what. I don't know what made them do it. I don't know because they said without a 2.5 they would not let me in.
Really?
Yeah. So I was in a spot.
Man.
And then I got into accounting and found the thing. It's what I love doing. I mean, who loves accounting. I like the business part of it, and working with my clients. But engineering was not for me.
You're not a normal CPA.
No.
And in the best ways possible.
Thank you.
Is what and I when I was an engineer, I was not a normal engineer, right? Very, very different from what you typically think of with that field. I have to pivot real quick and ask you a question. So, 93 engineering school, was 300 Main one of the buildings you were in back then? Like right there, like past the railroad tracks, right off of Main Street.
In Columbia?
In Columbia.
At Swearingen?
Yeah.
Was that the building?
So Swearingen was across the street. 300 Main is that older, decrepit building right across the street.
I don't think I was in 300.
Okay.
Most of my classes now, and I'm older than you, so I was there before you, but most of my classes when I was there, because I was there from 89 to 92, I guess it was.
Gotcha.
And then I left. But I was right across the railroad track is where Swearingen was.
Yep.
And I was there for a lot of, mostly crying on my part. It wasn't any fun.
Which discipline were you pursuing?
Civil.
Civil. Okay, gotcha. Yeah. So I started chemical, switched to mechanical. Most of my classes were in Swearingen, and then switched over to right across the street in 300 Main.
Okay.
So small world. You never know. This is amazing. Like we're learning things about each other. Great. So decided to go into accounting. Graduated, or after switching to Clemson, graduated, got a job, and then early 2000s started your own business.
Yes.
So what led you to start your own business in accounting?
I had been with the firm that I was with for 8 years, and the crazy wonderful thing about that was it was a very small business, just like mine is. He had fewer team members than I do currently, but I got to do everything. I mean, I started day one like hand coding checks to put into a DOS-based accounting system, because this was 1994. Of course,
wow.
there were, and it was one of those things where if I wanted to learn it, he would teach it to me, and it was great. I mean, I was doing tax returns my first tax season, and that was the point where the state tax returns were not in the software, and so we had to do them by hand. So I learned a lot of the background on these tax returns by doing them by hand, because that was and it sounds stupid to say that now, but that was 32 years ago. But he taught me everything. I got a lot of exposure. I was taking client meetings very early on. I was in charge of client relationships very early on. So I learned a tremendous amount. I just felt like at the end of the 8 years, I'd done everything I could do there. It didn't look like there was a point where I would be a partner or anything, and I was kind of antsy to get out. I was a CPA at that time. My boss was not, and due to state law, I can't advertise that I'm a CPA if my firm is not a CPA firm.
No kidding.
So
Interesting.
I could tell people I was a CPA, and my license was on my wall, but he could not advertise it, and I couldn't put it on a business card. And I thought, okay, it might be time to go. So I started a firm. I left right after that tax season in 2002, went in May of 2003. Had a folding chair and a fax machine the size of a Fiat, and started it. And it was I bought computers at Gateway, if you remember them. And
oh man,
got
Cowbox.
Yes.
I remember that.
So started.
Kids these days have no idea.
They don't. And the hard
this
drive
is
was
pre regular cell phones. Also,
yes.
Texting is not a thing at this point in time.
Yes, I think I had the Motorola StarTAC.
Okay,
that was the flip phone. That clipped onto your belt.
That's right.
And so I was very excited. I had no clients, and I'd already made a hire for a part-time person to help me, which was ridiculous. But I started it up and got moving, and it did quickly grow. But it was, man, I did everything wrong. I tried to blow it up so many times, and it's still here. Not on purpose, but
you pressure tested it.
I did.
That's the reality of it.
Yeah.
I'm sure there's a lot of stories we could break down with that.
Oh yeah,
we don't have to dig into those right now, but I do want to hear those stories.
I can come back and we can do a whole episode of how I tried to screw things up.
How to not screw up your business.
That's right.
Yeah, no, I love that. So thinking about like you're in the firm now. You started in you said 2002, 2003, right? Yeah. So we're almost 25 years past, right? What would you say, like if you had to sum up your entire like tax strategy, like philosophy around taxes? Like something that you feel like everybody should know about taxes. Like how would you sum that up right now?
I think that, and our primary focus is, of course, working with small business owners,
right,
or small businesses and the small business owners. I think that being proactive is the key. Addressing taxes from a reactive position is frustrating for the client. It's frustrating if they're working with somebody. and it's just not, no one likes surprises. And I cannot tell you when we get a referral that'll come in the door sometimes, I've heard stories like, yeah, I had to extend my return. I knew about it on April the 14th, and they told me I needed to send in a $45,000 check, and I didn't have any idea. That makes me sweat.
Ooh.
And
Ooh.
we just don't do that.
Yeah.
Our philosophy working with our small business clients is we're projecting and doing tax planning all the time, every single month. And it's, them asking questions or us going to them and going, hey, I'm seeing this. We need to talk about this. Starting to calculate SEP contributions in October instead of waiting until February and these kinds of things. So I think it's all about proactivity. When I started the firm, that was not what I was doing. I mean, it was not the same world then. We didn't have access to the same things we have access to now. The technology is totally different. Research is totally different. Thumbing through a paper guide of the Internal Revenue Code to try to answer somebody's question really stinks. So being able to do things now, we can do things so much faster now. And I personally wasn't set up to run the firm in a proactive way then. I was just trying to figure it out. But small business owners today, taxes change so fast. The landscape changes really fast. And we'll get to this soon, I'm sure, about all the changes for 25 and 26. There's a lot of stuff out there. And it's coming at us so fast that a small business owner who's trying to run a business and be profitable can't keep up with that stuff. So it's our job to bring that to them and say, hey, did you know about this change? That's why we write blogs and send things out to people and go, hey, we need to talk about this because, these two things are going to combine to make your life miserable. We need to talk about what to do about it. And we try not to, we might have to give out bad news during tax season, but that might be from something that we didn't know about. The client didn't tell us they sold a bunch of stock, or they got their 1099 from their mutual fund and it paid out a bunch of cap gains that they weren't expecting, or things like that. When we're talking about business profitability, wages, withholdings, all of those things, we've got that on lock because we're looking at it all the time.
Right. Yeah, I love that approach. Is like being proactive is always going to be the key thing. And that's the same way we approach financial planning is we were able to do some pretty incredible tax moves for non-business owner clients at the end of last year, just because like as a planner, like I'm not a tax professional, but I understand the code enough and I keep track of things like $100,000 Roth conversions that cost a client $4,000, or people that got to convert large amounts of money for $0 because they're bracket and you just play arbitrage games, those kind of things. Like it's, the thing that I tell a lot of people is the code is black and white. It's a formula. How you use the code depends on what your results are. And the hardest part of that, though, I think is like I tell retirees or like retirement planning clients all the time is, hey, the tax code has changed like 6 times in the past 4 years. It's actually probably more than that, like starting in 2019 with Secure Act and then Secure 2 and CARES 2 and like all these other things. Like it is absolutely a moving target. And if you don't have a professional in your corner that knows and stays on top of that stuff that you communicate with regularly, you're not going to win.
Yes.
That's my perspective.
Yes, definitely. And I can imagine that working with a client who has a close relationship with someone helping them tax plan is also helpful for you.
Very much so.
Because it can make you and the tax person look like heroes because you're thinking about the client, because you are. I mean, that's something that not everybody has access to or not everybody thinks about.
Right. Yeah, I agree with that. So if proactivity is the key, we'll say, is there anything that you would say around like tax strategy or tax planning that is maybe like oversimplified or misunderstood on a regular basis?
Yeah, I would say when we're working with tax clients who are not business owners, there's always this question of withholding. And I remember, I don't know exactly why this happened. There were a rash of clients who brought in W-2s, say from 23 to 24, whose withholding had changed.
Yeah, they changed the formula in like 21 or 22.
Yeah. And so now they end up either coming up short or, they've sort of been planning for this refund of a certain amount that they're used to getting, and all of a sudden that's not there anymore. And maybe they owe something or get back way less. And those are questions, a lot of people set this stuff and forget it. And you really shouldn't do that. I mean, if you need to be aware of what your withholdings are, and if you look at your pay stub and you didn't get a pay raise, but now your net pay has gone up, then maybe that's a question to ask and say, why did that happen? And compare this pay stub to the last one. Because we saw that happen, and then clients would ask me, like, what happened? And I'm like, that's you need to go to talk to your HR department or talk to whoever does the payroll because the tables have changed, but you didn't change anything to go along with that.
Right.
And when IRS or Congress or whoever made the terrible decision to turn the W-4 into basically a tax return and not what it was before.
It is impossible to figure that out online.
It is.
The calculator is I would just call you.
Certainly.
I'm not going to fool with that.
No, and I've looked at them for clients before, and a lot of times it's, hey, ignore the whole thing.
Yep.
Put your marital status on and sign it and give it back to them. That's all you got to do. Or
Right.
because a lot of times they'll put something in there, and then the spouse who has a job will also do something. And when you combine the impact of the two things, now they end up with no withholding. And it's like, how did that happen? The instructions on the old W-4 were terribly unclear, and people ended up messing themselves up there too. But those were easy to fix. The new ones are not easy to fix.
Yeah.
And I cannot tell you how many conversations I've had with payroll departments where I've helped the client fill it out and send it back in, and they go, well, you need to check this box or you need to do this. I'm like, no, we don't, because that's going to end up hurting my client.
Yeah.
So I think that people overlook that. And then when they get to the tax return, they're either alarmed or upset. And I've noticed that that's been happening more and more. So I think it's important to watch that.
And I feel like there's going to be a lot more of that in the next couple of years as well, like specifically for probably the 2025 filing season that we're just starting to kick off. And then pending what the legislation does in the next 4 years, going from 2028 to 2029, specifically around like the overtime, no tax on tips, like that kind of stuff. People that have been making money overtime and they're counting on overtime, number one, and they've also been counting on maybe a tax refund, they're going to feel probably fat, dumb, and happy for the next 4 years. And God forbid the legislation times out in the same way that everything just did with the healthcare subsidies. It's going to be really detrimental going into 2029. Again, I'm projecting, I'm hoping that's not going to happen, but I just anticipate there's going to be some changes.
Yeah, tax adjustments like that that are set up to sunset at the end of a certain time, those are hard to take back once you throw them out there. I mean, we saw what happened with the things that were set to expire, I think, at the end of 25 that ended up getting kicked out into either permanence or kicked out into 2029
right.
Or 2028 for when this recent batch of tax laws were changed. You can't give these large deductions and then take them away. And I think people know that in power when they make these when they make these plans and throw them out there. It's like you can't go to someone who's been deducting part of their overtime comp for 4 years and then go, oh, sorry, you got to pay tax on that now. That's going to hurt.
Right.
Yeah.
And I do think there is some strategy behind there. Like cynically, we always tell people, like the question about Social Security comes up whenever we talk about retirement. We don't want that to be our main, bread and butter for retirement in terms of stability of income, obviously.
Yeah.
And there's always the questions around the publications of the trust funds going to go defunct in 2033 and all that kind of stuff. Cynically, I just say, hey guys, the reality is politicians love to get reelected. How do you go into Congress with a net worth of $300,000 and come out with a $100 million net worth? Like they love to get reelected. And I'm being very cynical and kind of stabby when I say this, but I think that is a truth, and it is very difficult to create some kind of like legitimate or quasi entitlement program and then claw that thing back. And I would say in a way, tax deductions or like these kinds of benefits, like the additional enhanced deduction for seniors over 65. Well, they did that because they didn't get rid of taxes on Social Security.
Right.
Like let's read the tea leaves here. Like you can't just fundamentally get rid of taxation on income sources, but you can deduct it away to where for the families that really need that, it's going to have a big impact.
Yep.
And from my side on the planning piece, like that's what they did instead. It's very hard to go back and take those things away. So
yes, definitely.
So it's like I guess the key thing there is what I'm hearing you say is a lot of people just are not as proactive. So we need to be more proactive about it, but also understanding, these are my own terms, what the tax system is. And what I mean by that is when you get a refund or you have a balance due, that is not saying, hey, the government's deciding to give you a bonus. It goes back to the formula. Like if your tax liability on page 2 of your 1040 says you owed $27,000 in taxes, but you paid in $33,000 throughout the year, now you have a surplus you paid in, you get that $6,000 back. Flip side, you owe 27, you paid in 21. Now you owe $6,000. Like, it is a formula, and that's where being proactive can help you to not end up with a surprise at the end of the day.
Yes, for sure. And, a lot of people, this is something that, and it just pops up randomly from time to time where we start talking about tax brackets. And then I'll tell somebody, okay, you're within $10,000 of tripping the next bracket.
Yeah.
Is there anything we can do to keep you in the bracket you're in now? Well, if we have 3 or 4 months to plan for that, then we probably can. And there are things where working with someone like you, that's a huge advantage, because then we start talking about. I did this for a client a while back, and I was working with her planner, and it was one of these things where there were levers to pull that we were able to keep them out of a higher bracket, do some really, really good things with their money, make some really good plans. But had they been doing their tax returns on their own and maybe working with the planner, they probably wouldn't have been able to do that, or wouldn't have had the foresight to look at it.
Right.
And I mean, we were within a few $1,000s of them jumping into the highest tax bracket. And I'm like, okay, well, we need to work on some things. Now, we did the accounting for her business, and we were able to work with her on some things there. Here are some things you can think about doing. So between the planner and I mean, we did some good stuff. But these kinds of moves are not reserved for people who make hundreds of thousands of dollars. Again, going back to the whole withholding question, just check the pay stub and make sure you're not getting in trouble with that. What I am concerned about for our overtime earners and our tip earners, if the withholding tables change to take into account that people in these industries can deduct part of those wages and not be taxed on them, how are the withholding tables going to change in 26? Because they may be withholding a little bit less, so maybe the refund they get for 26 won't be as robust as it is for 25. I don't know the answer to that. One other thing, while we're talking about the overtime deduction, this is something that is probably going to come up. There's no reporting tool to show how much somebody made in overtime. The W-2s have not changed.
Interesting. Okay.
The tips are different. The tips have always been on there.
Yeah.
But there's no box for overtime.
There's no like little sub box, kind of like on a 1099-R, where check this or put this letter code in.
Not yet. So for 25, what I've told my clients, my business clients who have people who have overtime pay, is you need to be prepared to give them some sort of year-to-date pay stub so they can look at that, because they're going to have to take that to their tax preparer, and they're going to have to figure out what this is. The other tricky part to the overtime deduction, it's not the overtime wages in full. It's the overtime premium.
Ooh.
So this is where it gets crazy.
So like if I make $25 an hour, but overtime is $29 an hour, it's that extra $4 that is not taxed, not the full 29.
Exactly.
Ooh, that is not as gracious as people expect it to be.
No, it's not. And I've been warning people. I've been warning them. I'm like, so whenever we wrote our blog about that, I put a calculation in there. I said, so make sure you understand that this is just the premium. So if your hourly rate's 20 and your overtime rate's 30, it's the $10 an hour for the hours you worked that were part of that overtime. It's not the $30 an hour. So that's why I say when these things get passed and they get thrown out into the world, I had so many questions from my seniors telling me, well, there's no more tax on any of my Social Security. And I'm like, that is not what the law says.
That did not make it into the law. It did not pass the House.
Nope.
It was talked about a lot,
Yeah.
but it was not made law.
Exactly.
Yeah.
And so I had in my blog, I corrected it. I'm like, that's not what this means. This is just a deduction if you meet certain income thresholds and you're a senior. So there's a whole lot of math that goes into that. And I actually saw some of the senior deductions pop up in planning this year as we were doing tax estimates in Q4, because I do have a few clients who were in the ballpark to get it. And it's going to be interesting. The tax softwares, they're all going to do their job, and they've been updated for all these things because I'm seeing it now. But I do think as tax preparers, we have to look at it critically and say, did that calculate correctly? Because we can't depend on AI for everything. So
that's right. Yeah, I think there's a very good point there that you mentioned is, so things get passed and then it takes time to filter through the system. A big one that we've seen for the past few years is you had all of the laws around inherited retirement accounts changed in December of 2019.
Yep.
And then you had like 3 more bills get passed since then. So that was Secure Act 1 or Secure Act. You had Secure 2.0 Act. You had the CARES Act, CARES 2.0. Like there's incremental shifts for all of these. The IRS didn't give their official guidance on how those are actually going to be enforced in terms of RMDs while you're taking out your distributions until July 18th of 2024. You're talking about almost 5 years, like 4 years and 7 months to actually clarify the rules of how things get done. And we had a situation a week ago where I had a client that had inherited some accounts, and I told them, hey guys, like here's the rules. Like, did you satisfy your RMDs last year? And they said, well, no, the former advisor before we moved the accounts said we didn't have to. I'm like, well, that advisor doesn't know what they're talking about because I can show you online exactly where it says what you got to do. So there's a lot of confusion that you have to be very aware of, and then question. Like I don't say question everything, but you have to be very diligent to question the right things and validate information.
Absolutely. When the client, I say sign, as in the old days of them getting out a pen, you don't do that anymore. But when you acknowledge on an e-file authorization that this thing is ready to go, you've said this. All of this information is accurate and correct. And so you just got to be careful about that. I do think that, and I encourage my clients to go over their tax returns and come back to me with questions before they give us the e-file authorization, which is our cue to transmit it. I'm like, ask me questions. Look at the year-to-year comparatives. We spend a lot of time sending them information, and when I send out that final email that says, here, you owe this much, or you're getting back this much, I go through a lot of points. I'm like, this was your change in year-to-year income. If you look at page 4 of the PDF, that's your year-to-year comparison. Please look at that. Because some people don't really know what they made the prior year or what they made this year. It's just it's this smattering of information that they get in the mail and they scan it and send it to us. And but ultimately, it's their responsibility for it to be correct. So,
yeah, that's a very good point as well. I hear a lot of people make comments or have over the years is if their tax return didn't come back the way they expected, like they expected a big refund and it wasn't as much, or they expected break even and they had a big balance due. I feel like a lot of times, and this might just be pure ignorance and being naive, like they blame the tax preparer.
Sure.
And in the same way, I see a lot of tax preparers, not you guys at all, but like I've seen people over the years where they will try to make the numbers look a little bit better for the sake of looking like the hero. And I catch that of like a lot of times it's, oh, well, hey, you don't owe anything this year. Well, no. Page 2, 1040, you actually paid $75,000 in taxes. That was your appropriate bill, and you dialed it in leading up to the year. You don't owe anything else.
Right.
Not you didn't owe anything. So like I think it's being very critical and very, very specific about those numbers and how you approach it and how you understand what's behind it. Like that is important. And to me, that goes back to collaboration and communication. So I'm curious, like as you guys have grown in your business, you mentioned you've made all the mistakes. Now you're at a point where hopefully fewer mistakes, right, going forward. Yeah. There's always learning processes in business. But what would you say are some of the best aligned relationships that someone can have, like for the small business owner in their life?
That's a really good question, and this is something that we will talk to new business owners about from time to time. We offer a consulting engagement for brand new businesses are business owners who don't really know what it's like to own a business and run a business, and we take them through five or six meetings just about entrepreneurial potholes. Because I think with 30 years of experience, I've seen a lot of them. I probably haven't seen them all. I've run through a lot of them too, and so. I'm the guy who does not have any problem in the world sharing a war story about something I did wrong or something that I just misunderstood completely about owning a business and screwed up. I don't mind doing that. If I can keep somebody from making the same mistake, I'll happily throw myself under the bus or show them something stupid that I did. I don't have a lot of there's no pride there.
Yeah.
But I ask the question again. I think I got off track.
Yeah, no, you're fine. So the question being thinking about like, what are the best relationships that business owners should have in play?
Yes.
Yeah.
I tell my clients you need a good business attorney because there will probably come a point in your life when you're going to need somebody to review a contract. You're going to hire somebody. You're going to want to talk about labor law. You're going to need an attorney who can help you do those kinds of things. if you don't go through one at startup when you're setting the business up anyway, which you probably should do, then you need to have somebody you can speak to about that. Financial advisors, of course, that's key because there are going to be retirement plan discussions at some point if you are profitable enough. You are going to hire employees and you're going to want to talk about those things. And CPAs, I think, for nearly all small businesses at some point, it might not be from day one, but at some point you're going to outgrow the spreadsheet and you're going to outgrow all the little things you're doing just to keep it all bound together. You're going to need some outside help. And you need somebody doing your payroll. Please, for the love of God, don't do your own payroll. I got so many suggestions for that, and I have contacts, and I refer all my clients out because no small business owner really should be doing their own payroll. It's just too cumbersome. And I tell people, this is not advice. You could sooner not file a tax return for 3 years, and IRS will eventually find you. Yeah. But if you mess up a payroll tax return, they're coming to your house like day one. Yep. And it will follow you until you die. So don't mess that stuff up. And that's why if you have a payroll company, if there is an error, they will go through and address it for you. Yeah. You don't want to be messing with that.
Yeah, and I'm really glad you brought that up actually, because I wanted to go into like what are some of the common mistakes business owners make and how to work around that or work through that with the right professionals. I have seen many cases over the past few years where even working with a payroll company, let's say you pick a big box brand and you think you have everything in place because there's 3 letters in the name or more than 3 letters in the name and everything seems to be buttoned up, but then you actually have someone audit it or take a look at things and you find out you've been under withholding for the past several years. Or I had one situation, someone was over withholding and they were actually paying in too much and like in terms of like payroll taxes and was told there's no way to recoup that money. So it's one of those things. I think it's very important to have the right professional, like have a professional, but also have someone who's really competent, is intentional with you, and also go back to proactive to make sure that everything aligns successfully. And there's a lot of mistakes that it's just very expensive. Number one, to identify. Number two, to go back and try to resolve or fix. But so outside of like the payroll side, making sure you have a team that's competent doing that. What would you say are some other common mistakes or common pitfalls you see a lot of business owners make that they could be aware of today just to avoid that?
Yeah, sure. I think that it is admirable for a small business owner to take on their own accounting. And there are so many ways to do it. QuickBooks Online, which is what we use, it's there for everybody. They can go get their purchase it, get their license to it, and set up a chart of accounts and go. The thing that we find, of course, is that most small business owners, unless they're accountants, are not accountants. And so it's like you don't know where to classify things 100% of the time. And even if it's a fully deductible expense and it makes it onto the P&L, is that the best presentation to tell you how you're really doing? Like, for instance, business owners who have inventory and cost of goods, are they miscoding things in general overhead that skews their gross profit? So they really don't know how much money they're making on the thing that they are selling or the service they are selling to their clients. So it's not just about making mistakes in coding. It's making mistakes in setting it up from the ground up with a good chart of accounts that fits your analysis. And so I spend a lot of time redoing charts of accounts for clients who've set up their own books because it wasn't telling them the right stuff. It wasn't giving them any useful data. So it's like, let's go in and mix this up, move some things around. So again, if you can get past just the coding errors and not knowing how to use the software, like not understanding that matching a bank transaction is not reconciling your account. I get a lot of that. So I'll have people come in who haven't reconciled their bank account in 4 years because they didn't know they had to. I'm like, well, then how do you know that the bank statement was right and that something didn't get messed up? Yeah. It's like you don't know. And on the accounting side, I mean, the errors are plentiful. It's just, and it's not because business owners are dumb. It's just because they don't know how to do accounting. And that's because they're busy doing other stuff to make themselves money.
They should be, right?
Exactly.
Like you should be out there focusing on the widget or service that is the reason you got into business, like the passion, the purpose, whatever you want to call it, that caused you to take the leap and take the risk to try to make the world a better place.
Absolutely. You've got, occasionally you'll have business owners who operate by themselves for a very long time, and maybe they know enough to fund some kind of retirement plan. It might be a SEP. Well, then they make their first hire. And then it's like, what do I do now? And sometimes they don't know to ask that question. So then we get out 3 years, and now there's a problem because they should have been funding a SEP for the employee and they weren't doing it. And things like that. These are just rules that they wouldn't have known if they didn't have somebody to ask. And so it's our job, again, being proactive, looking at things like that, letting clients know, if you're in the state of South Carolina, there's a threshold of employees where you have to have workers' comp insurance. When you get to that threshold, you need to be prepared for that because it's not always a cheap expense.
Yeah.
And so just eyeballing things, looking at things. And I'm not an insurance guy. I'm like, I just know that there's a threshold. I'll have to look it up probably, but I know there's a threshold. So when you get there, you need to start asking questions because you don't want to get behind on that.
It's funny you bring that up. We're not at the threshold yet, but we're very close to it with our business. And I went ahead and got workers' comp in place just because I have employees that might be traveling during the business day for various reasons, doing different things for the business. And I was talking with my insurance agent, and the quote I think is under $500 for the year to cover like 3 or 4 employees. I said, man, like that seems like not a whole lot. He said, yeah, you're very lucky because of your industry. I said, what do you mean? So you have a painting crew, like a painting business. You're going into people's homes, you're on ladders, you're dealing with chemicals, things like that. Similar employee count might be several thousand to $15,000 a year, right? So like those things, what you're talking about, there's that unknown of, hey, if we're not proactive, we might get caught on the back end and have a large bill. Let's be very proactive. And even going back to how you're running your books, like make sure you're tracking the right things. I haven't dealt with that personally in terms of like the cost of goods sold or inventory side, but just maybe projecting or presuming on that is, your overall profitability just by tracking expenses is different versus what is my actual profitability after I pay for the cost to get something done. Are those numbers better or worse? And if they're not what I want it to be, how do I know which levers to adjust? Is it I need to find a different supplier to get a lower cost for my supplies, or is it I need to change my overhead for, travel or for, employee count or pay for employees, like those kind of things. Like there's a lot of different pieces, and you tell me if I'm wrong on this line of thinking, but like that's where I'm seeing this kind of come together.
Yes, and you're spot on with that. Case in point, I'm working with a client right now. She's moving into S Corp status in 26, and so we're trying to tighten some things up as a Schedule C filer that we need to change whenever we move forward.
Yeah.
And in a casual conversation with her, it came up that her contractor expense was in overhead, which is normally where it would be. But she said, hey, these are costs that I pass on to my client when I quote these jobs. So shouldn't that be in cost of goods sold? Well, we had been building forecasts based on a gross profit number that she needed to hit. Well, then when I dumped all that contractor expense into cost of goods, we had to change the numbers a little bit because we couldn't hit the gross profit number. And I'm like, okay, that's good information for me to have. So we've made the switch, we've redone the forecast, and we've changed some things. But when you are in a business that has expenses that you pass through to customers, and she doesn't have inventory, but she does have costs that are tied into her business. This would be for restaurants, it would be for salons, it would be for, any kind of hospitality, could be for some services. If you don't know that gross profit number is accurate, how do you know how to price? You don't. And for the restaurant owners who got behind the curve on raising prices when everything went through the roof a couple of years ago, they're in bad shape right now because you can only raise prices in a restaurant so fast because you'll lose customers, and they know that. And they were a little bit scared to raise them in the beginning, thinking, well, maybe this won't be bad. Well, then you know what happened. Food costs went through the roof, and they're not coming down to where they were before, but they're not where they need to be for these guys to make money. And restaurant margins are super thin anyway. But we hammer gross profit for any client that has that kind of calculation to make sure it's accurate. Because again, if you don't know that number's right, you don't know if you're charging enough for what you do. And that's critical. How many businesses fail not because of bad management or because of any other reason except the reason that they didn't know how to price what they were doing? Yeah. And I made the joke earlier about CPAs doing taxes at their desk and dying at 80 because they're still charging $300 to do a tax return. Those days are gone. Yeah. And I'm sorry, you'd have to do a lot of tax returns to make money at $300.
Oh, yeah. Yeah, just think about like so I've recently been learning about like the costs behind that. I mean, if it costs you $60 to $70 to file the return as a business owner, and you're charging $300, and you do 100 returns, that's gross is 30 grand, right? Take out your expenses. I mean, you're not making a wage.
No,
you're not making a livable wage at all. Which I think that's also part of why we're seeing a big compression in the tax business. A lot of it is going to online services. I'm really personally not a big fan of that for most people, for a lot of reasons. But it's a very interesting situation we're seeing, like things getting more automated or more digital, more volume focused versus quality focus, that kind of thing.
Yes, for sure. And I've thankfully have not gotten the question from people that I used to get, like, well, you're only putting the numbers in the box. Why does it cost this much? Yeah. And I think
we only pick mutual funds, by the way.
Exactly. I know what you do. It's I think those questions stopped for the most part for us in 2018, 2019. We decided to try to get out of just the annual filing business. I had a lot of that.
Yeah.
And for reasons mostly tied to my sanity, we had to change it. And thank goodness we did, because I don't know what I would have done during COVID. I couldn't have gotten all those returns done. It was insane. But there's a lot more that goes into it than just putting the numbers in the box. And if that's what a client feels their tax return is like, then maybe they can do a free online filing or go to like an H&R Block, or is Jackson Hewitt still around?
They're still around,
somewhere like that, and be perfectly fine. I mean, not everybody needs tax planning.
Right.
And not everybody wants to pay what we charge to do a tax return. It's valuable work. People hate it. It's like the dentist. Yeah. I love my dentist. He's a great guy. I hate going to the dentist.
Yeah.
I just despise it.
Right.
And he doesn't take it personally. He knows. And but that's how people feel about tax returns. And I get it. We try to make it as painless as possible. And that's where I think, all the work we do throughout the year, the other so many months of the year, really helps us out there. Because again, it's just at that point we know every number. My goal is when I do a Q4 tax estimate is to get to the tax return and be pretty spot on with it. And we're pretty good at that. There are going to be surprises. There are things that we don't know. But a win is going through all of that planning and coming back and going, I got you within $20 of your taxes. You owe 20, you're getting back 20. Or something happened and you got back a little bit of money. We'll just throw that into your estimates for next year.
Yeah. That's great. So thinking about that, let's talk about some of the big changes for this year.
Sure.
Because I think that's important to maybe close out the conversation for today is like, what are some of those new things people need to be aware of? One big beautiful bill, it's officially still named that. I heard a rumor they're going to change the name.
If Congress would battle the big fights and not talk about changing the name of a bill, I would be a big fan of that. I think there was actually a law passed to call it the Act, but we don't call it that. We acronym it, but we don't call it the full name. That's too much.
Yeah, gotcha. So the OBBBA.
Yes.
Yeah. Okay.
OB3.
OB3. There you go. So for OB3, what are the key things you think people need to know going into this tax season right now?
Good question. I think that we've talked about a couple of things, which is the tip income deduction, the overtime deduction, if you qualify for those things. One of the other big ones that's going to impact a lot of my clients for this year that we have not had to deal with since 2017 is itemized deductions. And the reason for that is the SALT cap, the state and local tax cap.
Right.
And for those of you who haven't itemized since 2017, in South Carolina, we didn't really have this problem too much, but the state and local taxes are now capped. Well, I'm sorry, through the end of 24, we're capped at $10,000 per year. And the reason they did that was because in 2017, they doubled the standard deduction.
Right.
So they had to back off on letting you write off all of your state and local taxes. We have clients all over the country. So my clients in New York and California really hated that because between state withholding, property taxes, real estate taxes, those guys are getting killed.
Yeah.
Like to the tune of $40,000 and $50,000 a year in state taxes they were paying. So they capped it at $10,000 for the last several years. For 2025, that cap has been raised to $40,000, only if you meet certain income limits. And I won't dig into it because I don't want to misspeak on anything about whether it's AGI or taxable income because they're all a little bit different. But that's going to be one change that I think clients are going to see this year. I have already seen the impact when I was doing Q4 estimates for a few of my clients because many of my South Carolina clients didn't have that problem. Property taxes here are not what they are in New York, obviously.
Right.
And so they were never paying more than $10,000 in state taxes.
Right.
The ones that are now seeing deductibility at like $15,000 or $25,000, whereas again, it was always capped at 10. So itemization, whereas the last 7 or 8 years, it's just been like, nah, you're not going to itemize because, maybe your mortgage is still at 2% and your charitable deductions are fairly low and your state tax is capped at 10. You're not going to exceed the standard deduction for a married couple because it's pretty high.
Right.
But this year we're telling everybody, send all the information just like you used to. Let us run the test to make sure we don't, end up shortchanging you. Whereas if the standard is $31,000 and maybe you can get up to 35 and you itemize, then that's good for you.
Yeah.
I think they're going to be, I think people need to watch that. Now we're talking about it to clients. If you are doing your own return or if you have a preparer that, if you're at an H&R Block and your preparer changes every year, take everything in and just let them run the numbers and see. I think that they're going to be, I don't know as much about this thing because it's happening in 26, but you've probably heard about the changes in the charitable deductions for 2026. That's something that people need to be thinking about if they are very charitable. We've got clients who do donor-advised funds and things like that. There are going to be some changes to charitable deductions in 26. They need to be thinking about that. As soon as they get 25 out of the way, start thinking about that. But then I also think that 25 is going to be interesting because there's a ton of new stuff for the small business owners as well. Retroactive introduction of bonus deductions for pieces of equipment, furniture and fixtures and things like that that went back to, I think, mid-January. So a lot of our clients were looking at 40% bonus and that got jacked up to 100. So a lot of big changes there. Those are probably the primary ones that I'm seeing most of my clients. The child tax credit has changed and gone up a little bit. But yeah, there's a lot. And, you cross your fingers and hope that your tax software, if you're doing it at home, is going to catch everything. But wouldn't be a terrible idea to maybe scan the headlines and look at these things and be sure it's right if you're doing your own return.
Yeah, I completely agree with that. And again, my preference for most people is work with someone who is competent. Much harder to find those people today. Take price out of the equation altogether. It just seems like there's a less of a supply of qualified people these days to actually do the work.
Yes.
Because you have the people literally in their 80s doing tax returns in their home office, and they just stop or they just can't do it.
Yep.
And I've even seen some of those where people were still operating beyond where their mental capabilities should have allowed them to do that.
Yeah.
So I guess one final question I have for you, we talked about a lot of great stuff, and I feel like we could dive deeper in a lot of avenues as well. One question I have for you is when you're looking for a competent tax professional, you hear a lot of different terms or acronyms thrown around. Most people, they just say, hey, my CPA, and they really don't know that their person is just an accountant. They might not even be an enrolled agent, definitely not a CPA. Can you just break down briefly, what are the different maybe tiers, if you will, of the qualifications for a tax professional and when those would fit the right person?
Sure. CPA is the highest level. And with that comes the big test that you have to pass. And, you walk out of that knowing a decent amount of tax knowledge, tax theory. But if I were looking for a tax preparer for myself and I didn't do it myself, I would want somebody who had a decent level of experience in what I was doing. And I'm not saying it needs to be like a tax person who does tax returns for restaurants. I'm not saying that. I'd like to work with somebody who has knowledge of small business. And if I have a small business, they've been around for a minute and they kind of know the lay of the land. But I've seen bad tax returns from other CPAs. It's not, we don't have carte blanche on making it all accurate and proper and all that all the time. So there's the CPA level, then there's the EA, which is the enrolled agent. We actually have an enrolled agent on our team now, which is awesome. I've been the only licensed guy in the office since it started, I'm very happy about that. EAs, that is a designation that is IRS driven. It's an IRS exam. It's an IRS license. And you have to have a certain amount of continuing education a year. As a CPA, I have to have 40 hours a year. I generally get about 60, and I carry over some. EAs, I might get this wrong. I think it's a certain number of hours every 3 years. It might be like 70 hours or 72 hours or something like that.
Okay.
But it's a decent amount. And my perception is that there really is no difference. CPAs, from a tax standpoint, know as much as EAs do. It's
Okay.
CPAs are out there because they can do audits. I don't do audits. I hate audits. But an EA couldn't do an audit. An EA can own a firm. An EA can start a firm. An EA can do stuff from home. I mean, they can do the same thing I can do, except I could do audits if I chose to. So when you're thinking about it, it's not that one is necessarily better than the other, but EAs know just as much about tax, if not more, than CPAs do, because it's their focus.
Gotcha.
And you can find, there are so many smart, long-time tax prep folks who work from home who have no designation. They have a deep interest in tax, and they have reliable software, and they can do tax returns that are basic returns for just about anybody. But you could get to a point where you outgrow someone like that if you are, say, self-employed and you've got a Schedule C business, or maybe you buy a rental property or something like that. You may get to a point where that's not the kind of person you need. And I've seen that. I had a client come to me the other day and it said, my mom's been doing my taxes forever. She is a CPA, but she doesn't work for a firm anymore. And he's like, she would probably not mind getting rid of it. I've just always let her do it.
Right.
So I'm doing his return for 2025 moving forward. So, we're all human. We're all going to make errors.
Right.
But if you when you're thinking about it, I think EAs get the short end of the stick from time to time because nobody knows what they are or who they are.
Yeah.
But these guys know tax, and they can do everything I can do.
Right. I appreciate the way you laid that out, because I think there's so much truth behind the fact that you don't have to just have a designation to be really good at it. Like in our space in the planning side, I was doing the same work I'm doing today before I ever had my CFP.
Yeah.
And I would catch a lot of errors or mistakes by commission or omission from people that were CFPs at the time. I also know a lot of great planners that only work with life insurance. Like they are only licensed for life insurance, and they actually know more about tax and investments than most other people that are investment professionals out there.
Yeah.
So it's one of those things. I think it goes back to like the passion, the purpose, and like finding someone who aligns with what you're doing and what you're trying to accomplish is always going to be the most important piece with that.
Yeah, I will say that if I had known what an EA was when I got my license, I might have done that as opposed to doing what I did.
Okay,
and
interesting.
that just goes to show that the designation is not very well known.
Yeah.
And I think that the AICPA has a much stronger presence for continuing education and for lobbying and all of these things than the EAs have. So I think that's probably something that I hope it'll be corrected over time. I don't think they have the presence because of something like that. But it's like I know a lot of EAs, and dude, these guys are sharp. They write amazing articles about tax planning and that kind of thing. I read most of them. And if I had known, that test, man, it almost killed me. And so if I'd known what I was getting into, I might have gone the EA route.
Gotcha. So that's good to know also for people thinking about getting into the industry.
Sure.
Yeah.
Yeah.
Great. Well, I really appreciate your time, Jonathan. Thank you for being here and sharing with us today. I know this is going to be very helpful information for a lot of people that tune in. Before we wrap up, what is the best way for people to find you?
I would go to the website. The name of the firm is Follow the Wolf. The website is follow-wolf.com.
Okay.
And we have a contact page on there. You can reach out to us there. I think that's the best place to start. It gives a great summary of what we do and why we do it and how we do it and all of that stuff. I've gone to great lengths to give as much information as humanly possible on the site before anybody ever gets to us. We're having a lot of fun right now. And so I love working with small business owners.
Yeah.
I love the challenges because I've been through a lot of them. And I love what I do. So if we can help, we'd be happy to help.
Great. Thank you so much, man. Really appreciate it. And for everybody here who is tuning in, if you are a small business owner, I would highly recommend chatting with Jonathan, reaching out, read the website first, right?
Yes.
Make sure that's what you need and everything, but would not recommend anybody go anywhere else based on that. So
thank you very much.
We appreciate you. And also give us a good like and a share. Let us know your feedback, and we'll catch you guys next time. Discussions in this show are for entertainment and educational purposes only and should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer and member of FINRA and SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and neither SmartPro Financial nor Bridgeway Wealth are affiliated.